Let me hone in on the UK. What makes them look undervalued to you?
For the UK, you've got to go back in time a little bit to see how we got to where we are today. So the UK went through a period after the Brexit referendum vote in 2016 where global investors thought, I don't know what's going to happen. And the whole political process was pretty chaotic in terms of how it was handled. So for many global investors, they took the view that it's uninvestable because we have no idea what's going to happen next. The UK kind of fell off the radar screen. Then we had a political chaos for a few years as well. The UK also became viewed as perhaps it's not a very well-run country. So while that was happening, people were really ignoring the UK. At the same time, had a mix of industries in the stock market which were out of favour. It didn't have any big IT companies. It had oil and gas companies, commodity companies, it had banks, it did have some global healthcare companies. When you compare those industries and what you'd normally pay to own them globally, and then you look at what you're paying to own them here, there was a discount because people, for the reasons I mentioned, had ignored the UK, weren't sure what was going to happen. So that can go on for quite a long time, but eventually a gap opens up. Suddenly those factors that were counting against the UK are now more in favour of the UK. It has more stability than other countries had before. It has not been as heavily impacted in the tariff changes. The valuations on offer mean that it's attractive. And you see that because the businesses themselves are buying back their own shares with their excess capital. And you see that because private equity firms are buying UK businesses and continue to buy UK businesses. And with these things, again, as an investor, it pays to take a longer term view. And so while something might be undervalued for a while, eventually that value gets recognised.